I wanted to address the elephant in the room of cost of life insurance. I'm going to break down a couple of different types of insurance, why they cost what they cost, and whether or not you should get a certain type of insurance versus a different type of insurance. If you're here, you're probably between the ages of 50 and 80. This is a very challenging time to get life insurance because as you get older, things get more expensive. Fun fact, actuarial tables dictate the cost of insurance off of the average age of passing in America. So for a male today, that's 70 and a half. For example, if you're over 70 and a half years old, you shouldn't be alive in their eyes, but you are. And therefore the cost of your insurance is going to be a little bit higher than someone just under 70 and a half. The first thing I want to address is the type of life insurance based off of your age and whether or not you're healthy enough to qualify. There are really great rates out there for people that are in great health. If you've never had a heart attack, stroke, or cancer, kudos to you. You're in amazing health and you can definitely get great plans at a great rate. The second is depending on medications that you take may give you what's known as a rating or no rating. Rating means that you're not as healthy as someone who's taking no medications at your age, and therefore you need to pay a little bit more to get the same amount of coverage as someone who isn't taking any medications. This could be high blood pressure, this could be diabetes, thyroid, liver, kidney, any type of issue, but it does not bar you from getting the program. Here's a great example I like to give. If you have a $500,000 home, if you can protect that asset to make sure it is inherited, that's an amazing thing that you can give to your family. It would be worth how much to you to make sure that that stays in the family? It's a great question to ask. Obviously, affordability comes involved with that too. But I wanted to show you an example of great rates for someone who is even 65. Here is a company that I work with. You can get a 10-year, 15-year, or 20-year plan at reasonable amounts, and this is $300,000 in coverage for a male at an excellent health rating. This will change depending on medications that you take, the amount of coverage you need, and what you can afford, but know that any type of product that can cover an asset as big as a home is extremely valuable. Outside of paying it all off, this is one of the last few things that can protect you and your family to make sure it stays in the family. This is a term product. It is short term, it eventually disappears, hence these 10, 15, and 20 numbers here, but it is an amazing product if you can qualify for it. This type of policy requires medical underwriting, which means blood and urine. They want to make sure you're this healthy. There are other companies that I work with that don't require any medical underwriting, but they come at a higher cost because they're going to assume that you have some sort of health ailment if you're unwilling to go through a medical. That's how it works. The other thing to consider is how much life insurance do you actually need? And this is going to match up with what you can afford. Here's an example. If you're between the ages of 50 and 80, there's a couple thoughts on your mind. First is end-of-life costs, funerals. You have potentially a mortgage. You want to make sure that stays in the family. And maybe the last piece is leaving something behind to your family, an inheritance outside of a home, or maybe you don't have a home. Maybe you don't have a 401k. Maybe you have yet to put some money behind for savings or retirement or inheritance. Life insurance can help you here too. Remember, everything in life comes at a cost. I don't need to tell you that, you're probably older than me, but if you wait too long, you have to make up for it in the later years or at a later time. If we're looking at end of life costs for funerals, I have a video I put out there. It's about 15 grand today for earth burials. It's important to have a policy for something that small. You don't want to justify using your savings because you might use that in your retirement or for an emergency, and then that burden falls on your family. You get a small plan, I call them pocket policies. The next is a mortgage protection plan. This is something that can cover the entirety of a home, but oftentimes I recommend covering a portion of it, and here's why. If you have a $300,000 mortgage for the next 20 years, that amount will decrease over time. So getting a plan to cover that perfectly is going to be ineffective the following year because now your mortgage is going to be $290,000 and yet you have a $300,000 policy. This will go hand in hand with how much you can afford. If you can't afford the full amount, great, but it might be wiser or more cost effective to get a plan for $200,000 as opposed to $300,000, still covering you for the next 20 years, but it allows you then to have an affordable premium while covering most of it, and then in 5 or 6 years, that mortgage balance will meet that $200,000 and now you are fully covered. It's a cool trick to be able to make sure you're covered for the whole amount in the future, because right now when you're 60, 65, you're going to be way healthier than when you're 70 or 75. Makes sense. And then the last is an inheritance. Now, this is where a lot of people get confused, I find. They're trying to get a policy on them so they can leave some money behind to their kids or their grandkids. What I recommend, if it's out of the budget, because it's 75, it's going to be over $100 for a large amount, I recommend getting a cash building plan on a minor or a grandchild or a child when they're over 18, when they're young. The reason I say that is there are amazing plans that you can pay into for 5 or 10 years, and then no more payments are made and the policy continues to grow with them for the rest of their life. This is called a mutual whole life policy. It's something that a lot of people don't know about because there's only 7 companies that provide that to the market. And it's a deeper conversation, but it's an amazing way to allow an inheritance to be given to your grandchildren or children at an affordable rate, and it will live with them for the rest of their life. Second to that point is what it does accomplish is the issue that you're most likely facing today getting insurance is that it's so expensive. If you can get them something that is affordable when they're young, that is locked in and grows with them through time, when they do reach your age, they won't even have to worry about it because you set them up with something that would grow without any hands-on. Really important thing to consider if you're looking at an inheritance, but those are the 3 things: final expenses, mortgage protection, and then leaving a legacy above and beyond any assets you may have. I always recommend having some life insurance just because your assets are typically going to be used for your own retirement, not to be passed down. A life insurance policy just blankets everything. Good insurance to cover anything at any point in time, God forbid. Last piece with this is most life insurance policies provide living benefits. That's why they call it life insurance, so you can use this money while you're alive. It is going to happen when you have a serious health event, such as a heart attack, stroke, or cancer, or terminal illness. If you're in great health, this living benefit can provide a ton of benefit to you in the future because now you don't have to go through your retirement or your savings to help afford certain medical costs. Your life insurance policy can come into play and allow you to take care of those bills. Helps you out, helps your family out, and allows that money you've been working for to save to be given as an inheritance with no issues. So I hope this makes sense. If you have a specific situation with regards to you or your family, please leave a comment below. I'd be happy to chat with you about it. Thank you for watching this video.